Good evening and welcome to tonight's webinar where we look at member-only content for ASX investment opportunities in review for the 6th of September. The advice provided this evening is general advice only. Investor Signals provides a broking account service which incorporates access to our model portfolios. The models include the ASX Top 20 and 50, the iShares. In the US, we look at the Dow Jones Top 30 and the US S&P 100. Also in the model portfolios is access to our ASX and US high convictions, and includes an independent portfolio where any specific positions that you want to take an overweight allocation to, or maybe the stocks that are outside of our models, we operate or hold those positions through an independent portfolio. We also have access to derivatives inside your broking account to enhance portfolio returns. So a few different options there. If you'd like to talk to me about our broking account service, please contact me on 1300 614 002. The performance data on screen here captures the 5-year average of all the algorithm signals, and that's all the buy signals, so buying on the first buy signal and selling on the first sell signal, and that's the performance of it. So the Australian equities have outperformed the XJO on a 5-year average, tracking at 14.87%, and the US has performed a little better than that, 19.29%. The services that Investor Signals provides is the research, which you can subscribe to for $1,320 for the year. The brokerage account, which is our private client brokerage account. We work in partnership with you to manage a broking account, or a managed fund, where it's a bit more of a set and forget, where you're able to put your money in a unit trust. It is pooled with other investors, but you're getting exposure to our investment strategies for the long term. If you'd like to know more about those services, again, contact me in the office. And just a reminder that if you're joining us for the first time as part of your 30-day free trial, the service is $1,320 for 12 months. And again, just if you'd like some tuition or guidance on how to set up your model portfolios, please contact me in the office. Starting this evening with the ASX 100, it's been a few weeks since we've gone through the full list of 100, so I'll move through these tonight. We'll get part of the way through the list, and they'll go from stocks that are under buy conditions, which means that you'd find these positions in the model portfolio for the ASX 100, but at the moment we're in the watch list. So all the first stocks we go through will be under buy signals, and then we'll get part of the way through the list and it'll shift from buy conditions into sell. So all the stocks under sell are not in our model portfolio, but I'll share with you my thoughts on a couple of names where I think we might be getting close to an inflection point where they're likely to shift from sell conditions into buy signals. Hopefully over the last week you've been able to keep tabs on what I've been talking about on the blog. Just to recap on that, we click on the news button, and what we're seeing here is the last 7 days of blog posts. I think this is a useful quick review before we get into the full 100 list. So just recapping the ASX signals for today, Wesfarmers is probably the main one of interest for the majority of our members. That's pulled back from its highs, and we'll have a look at that chart and talk about the way to manage the entry position there in Wesfarmers. This food ETF is a beta share product, global agriculture. Here's what you're getting exposure to by investing in this ETF. There's your weightings. Deere & Co is the largest weighting, but it's shifted from sell signal into buy conditions, and I've just drawn your attention to the support there just below $7. Gold's continuing to find support as the US dollar pulls back. The soft employment data in the US has helped see that retreat in the US dollar, and that's pushed gold a little bit higher. So I've been talking about our preference there, Northern Star over Gold Roads, but Gold Roads is also one to consider. Wesfarmers, just been drawing your attention to the pullback there, the buy signal, and I've created a range there which we'll look at a little bit closer as we toggle through the charts this evening. Northern Star, as I mentioned, we like that. In the ETS, we closed out the beta shares Japan ETF. It was a small gain, 4.87%, but we didn't hold it for very long. On the high conviction side of the portfolio, we've opened new positions, and we'll look at these charts a bit closer as we go through the stocks this evening. But Altium's been added, Horizon, Cochlear, we've added to that existing position. Rio, we've added, so that's a new position that we've opened. And Wesfarmers, we've added to that position. In the US, we've opened new positions in Amgen, Colgate, ConocoPhillips, and IBM. And I'll look to do a specific webinar on US stocks maybe once a month or once every 6 weeks for those that are interested in learning more about the US companies and US stocks. The food ETF, we've already covered that. Bega, continue to like that as a recovery opportunity. Global Energy ETF, it's a beta shares product again that gives you your list of companies that you're getting the most exposure to, but just highlighting that that's now under buy conditions, and you might want to have a look at that chart. Cochlear, I like this story here. This is one that shifted from sell conditions into buy conditions some time back. We've then since had another rally and a pullback, so that was the original signal there. We've had the rally and now another pullback and the algorithm buy signal, and we've just started adding to this existing Cochlear position again, and that's starting to perform quite well, so we'll look at that closer as well. Wesfarmers we've covered, Gold Road, so most of these we've looked at. The iShares Asia ETF, again just to recap, I think if you're looking for a basket exposure to blue chip stocks in Asia, this iShares Asia ETF is one way to consider that. It's under buy conditions. Cochlear we've covered. Centre Group was closed out. I think we're kind of getting into where we got up to in last week's recording. So AZJ's been added. Centre Group's been closed out for an 8% gain. And that pretty much takes us back to... So we closed out so we've added in the US Amazon and Kraft Heinz into the high conviction portfolio. And we've closed out Gilead Sciences, which for 11% gain. PayPal, Amazon, and Amgen are stocks that we've added. Cochlear we've covered. Australian Pharmaceuticals, so there's an extra page here that we need to cover. So Australian Pharmaceuticals, just one to have a think about, a bit more speculative, but just highlighting that it's shifted to algorithm buy signals. Altium, as I mentioned, we've added that into our portfolios. Long signal in Altium there, and a sell signal in AWC. And then there we are, back to last week's webinar. Okay, so starting this evening with toggling through the ASX 100. If we have a look at the first stock in the list here, Idp Education, and we just backtrack, it's under our algorithm buy signals. It's rallied from the $20 level up to 32. The original switch was from sell condition up here into buy condition at around $15 now, trading up towards 32 there. Evolution under buy conditions, preference for us is Northern Star. Crown, I like this as a recovery opportunity. It obviously carries higher risk given the uncertainties around their licensing issues in both Victoria and in New South Wales. The market, I think, starting to buy into this on the basis of a summer, I guess, period in Australia, coming out of lockdown and the normalisation of trading conditions, and we're starting to see buying interest build in Crown, obviously ahead of that time. You may recall that Crown has had takeover offers that have valued the business up at around $12 to $13, so I do see that there's up to 20%, maybe even as high as 30% upside in Crown in a normalisation of trading conditions there. South 32 under buy conditions supported around 275. We hold that in the model portfolio. Again, all these stocks that I'm covering now, you'll find them in the top 100 model portfolio. Reece has switched to buy conditions, support there at around $19. If you're looking for a trade, you could track this, wait for it to cross above that 10-day average. From an investment standpoint, I think it's fine to have some exposure here, but where I've created these bands, it's really a reference to saying that keep the position size a little bit smaller than normal and be prepared to add to it. Obviously, you're seeing some pullback in these housing stocks or housing related stocks. globally, in particular starting in the US market, which obviously has implications for us as well. Cleanaway Waste Management, one of our preferred defensive names. We see continued upside for this, but at the moment it is very expensive relative to the low levels of earnings growth that we've seen and the dividend compressing down to less than 2%. I think when I last looked at it, it was tracking just above 1.5% dividend yield. So it is expensive, but we do like the long-term fundamentals there. Tabcorp finding support. So if we look at the recent algorithm buy signal there at around 470, it's holding above that. We do have the upcoming separation of the two Tabcorp divisions, which should put a bit of a support under the share price. Northern Star remains the preferred gold exposure, and we continue to hold that. ALS under buy conditions, so just backtracking, we're looking at the switch here from sell signals in May 2020 into buy signals earlier this year in March this year at around $10. $9.20, now pushing up towards $13. The most recent signal was off that $11 or $12 support there. Afterpay under buy conditions, one of the better performing stocks in the model. Link Administration, now I think there is some value here for patient investors. I still think their large equity holding in PEXA is an asset which may end up being taken over. And we've also seen takeover offer for Link Administration, which the board rejected. So the trading update was a little bit soft in Link, mainly due to an increase in expenses around technology development, but that was the reason why the stock's corrected from 5 down here to 420. We're starting to see some buying interest rebuild, but the company's guiding towards better earnings outlook in 2023, which when we think about it, analysts are really starting to focus on those 23 numbers now as we move into we're really only 12 months away from that being the focal point. So Cube Holdings under algorithm buy signals. I like the fundamentals here. The earnings result came in above expectations, and we're comfortable with that as a core part of the whole portfolios. Xero, just be patient here. We own this as probably one of our more overweight technology stocks. But it is getting a little bit expensive, and you may want to if you don't already own it, just be patient, wait for the next pullback and look at it on the algorithm buy signals. These retail stocks, so not just JB Hi-Fi, we're seeing Harvey Norman's, Adidas, a few of them pull back and generate buy signals. I think it's fine to start to look at these. Maybe JB Hi-Fi is a preference over Harvey Norman, but again, just keep the position size small. Computershare under buy conditions, we think there's upside for both Link and Computershare. Goodman Group, interesting, that's found support, so the sell-off was very shallow here, and if you look at the trends in the earnings, it's understandable. The company's delivering 14-15% earnings growth, looks to be confirming that will be the case for the next 2 to 3 years, but it really is compressing down to a low dividend yield, so I'd be surprised to see another sharp rally from where we are, but obviously the downside seems to be fairly limited there in Goodman Group. So we still stick with Goodman Group and SLF as our two main property exposures. Within the banking sector, we got ANZ under algorithm buy conditions, support there at around 26.50. An alternative is the MVB. Domino Pizza is still one of the better performing stocks in the model portfolio. If we look back at the last buy signal there at around $83, the stock's rallied substantially since then. Good earnings result, came in slightly ahead of expectations. Just be patient, wait for the next pullback and add to it on the buy signal. Cochlear, as I mentioned, it originally had the switch from sell there into buy at around 290. It was added into the 100 portfolio at that point in time, but we've now had a subsequent buy signal here at around this 220 level. We've added to our original position on this pullback. We still maintain that the healthcare space in general is a sector that you still want to buy the dip in. Harvey Norman pull back to $5 again, maybe slightly preference over JB Hi-Fi over Harvey Norman's. Macquarie Group performing well under algorithm buy signal. Definitely the thesis is playing out there where we were backing Macquarie to have better share price appreciation than the major banks. ResMed's performed extremely well since the run of algorithm buy signals last year, and we know that this rally's been because of product issues with their one of their main competitors, and that's probably not a lasting problem. So the next pullback that you see in ResMed, will probably tie in with, I think it was Philips, that bringing their product back online. And that might be an opportunity to buy ResMed on the dip on the next algorithm buy signal if you don't already hold it. REA Group under buy conditions, it is expensive, but just high or low there around 150. Challenger under buy conditions, again preference probably Macquarie and even the major banks over Challenger, but it is in the model portfolio. Charter Hall's performed extremely well. Altium, this pullback from 37 down to $30 is a buy on the dip opportunity. I get some comfort given that Altium had the takeover offer from Autodesk, which big US technology company, from recollection, was up around 37.50 a share. CBA back on the kind of radar, support there just above $95. It is in the model portfolio. It shifted from sell conditions into buy, but from previous weeks, the view there that the top line revenue growth is pretty low in these banks. It's a little bit about cost control, but at best they're only stripping out 1 or 2%. So we think the banks is more of a yield play and really bumping along sideways. Downer EDI, we like this as we do CIMIC. Downer's in the model portfolio. You can see support there at around 5.25.30. And I had a view that around 650s probably pulls up this current rally, and it consolidates around that level. Wesfarmers has corrected from 67 down to 57, so I've created a bit of a range there, and I think it's fine to start adding to Wesfarmers at this level, but again, just keep the position size significantly sort of low enough to be able to add to it if you need to. And this is really just a reflection that the valuations in the market are a little stretched. The soft employment data in the US on Friday night has meant that the US dollar's pulled back and US interest rates are less likely to rise than maybe what the market was thinking a few weeks back, and that could continue to put a support under equities. So the valuations may hold up if interest rates don't rise too quickly. So Wesfarmers taking advantage of obviously the issues with store closures around the current breakout with COVID in New South Wales and Victoria. I think this pullback creates a buying opportunity, and it's worth adding some to your portfolio if you don't already hold it. WiseTech, just be patient there. It's a good performing stock, but it's extended from the buy signal, as is Woolworths. If we look at the history here, it switched from sell into buy. It's performed extremely well, but it is getting expensive there. GPT's under buy conditions. Metcash is under buy, but I don't think there's much in the way of earnings growth for Metcash. Westpac under buy conditions. Sydney Airport's performed very well. One of the better performing infrastructure stocks we hold in the portfolios. Treasury Wines under buy conditions, it's done well. Oz Minerals has rallied off that $20 support, now trading 24. AZJ, as we looked at the beginning of tonight's recording, is a recent switch from sell conditions to buy. So what I'm referring to there is it's gone from its most recent signal being the red box, which was the algorithm sell, which was flagging the lower lows, lower high patterns. We're now breaking out of that trend, creating a high, low. We give it the benefit of the doubt. We've got support there at around about that 370 level. For traders, what you may want to do is just be patient and wait for the share price to trade back above that 10-day average. But it looks to me that we're starting to get the pickup in volume, the buying support here, and we could be an inflection point where Horizon sort of finishes this long structural downtrend that it's had. And what we're looking to do is capture the early stages of an uptrend beginning. If it doesn't eventuate, it'll shift back to sell signals and it'll be removed from the model. But just highlighting that AZJ is a new addition. BHP, the pullback from 55 down to 42. If you don't hold that, you may think about adding that to your portfolio. In general, the iron ore stocks, again, just keep the position sizes in proportion. It's hard to get a certainty as to where iron ore prices settle. We've had a big pickup in volatility, and we've seen iron ore fall from 220 down to 130, back up to 160, and then back below 150 again. So I think it's fine to be holding some exposure in these iron ore stocks and buying the dip, but just keep the position size, um, you know, relative to your risk profile. BlueScope still under buy conditions, and we'll have a look at that on the next pullback and algorithm buy signal. IGO performing extremely well, rallied from $7 up to almost $10. Bendigo's now under buy conditions. Again, preference within the banking sector is still Macquarie and maybe the MVB, which is a basket trade over the Aussie banks. Rio Tinto corrected from around 135 back down to around 110 under buy conditions, and we've added that into portfolios. Mirvac performed extremely well. Stockland under buy conditions, it's holding up okay. Seeks rallied, even though at 50, 60 times earnings, the stock looked expensive. But it's rallied from this $29 level, which was the most recent algorithm buy signal just there. So as soon as it sort of started to break above that moving average, you've had the extended rally and Seeks back up near its original highs or all-time highs there. Incitec Pivot has rallied off the algorithm buy signal up to around $3. A little pullback at the moment, but I think the fundamental story here for Incitec is improving, so I'd expect this to find support again above sort of 250 and eventually take out this $3 high. I think Incitec's in the beginning of a new multi-year uptrend. Beach Petroleum, preference Woodside over Beach. Lynas has performed extremely well under buy conditions. Woodside, again, get comfort here that BHP's holding equity in this merger rather than taking cash, so we're happy to be a buyer of Woodside and be patient waiting for that turn in the stock. Soul Pattinson under buy conditions performing very well. Santos, we're yet to see whether the Oil Search shareholders vote in favour of the merger, but thinking about adding some exposure to Santos in your portfolio down around $6 is probably a reasonably sensible idea. Again, just be mindful of your allocation. So if you're looking at that fuel ETF, which is global energy stocks, if you're holding Woodside Petroleum as well as Santos, and so just be mindful as to how much exposure you got there. But our order of preference probably is Woodside Petroleum, maybe the fuel ETF, and then Santos. Mineral resources under algorithm buy conditions, preference there BHP. Within that space. Oil Search under buy conditions again, but a little bit further down the list of preference. Aurora we think is a little bit expensive. Lendlease we like as a long-term recovery, but recognise the next 6 or 12 months are going to be tough. Fortescue went ex-dividend today, so think about, if you don't hold this, think about building a position in this down at around this 1850, and then again just allowing some volatility in iron ore. Keep the position size in proportion where you can add to it if you need to within that band that I've indicated. Alumina. So now we've gone into stocks that are under sell conditions. So these you will not find in the model portfolio as they're all under algorithm sell signal. But I'll just highlight to you a couple of opportunities where I think we might see a shift from sell conditions into buy conditions. Car sales over the next 6 months will see a retracement in that and a shift back to buy conditions, and you'd want to add that into your portfolio. Likewise with Ansell, we think there's maybe another leg lower in Ansell, and then we would have a look at it purely from a valuation standpoint. So I'll just jump back to Ansell. It's a good business. We're maybe seeing some of the tailwinds that have driven the earnings upgrades start to wane a little, and as a result of that, if we see the market sell this rally and another sort of sell off down around this $32 level, I would buy Ansell purely on a valuation basis. But at the moment, I don't think it's compelling enough. If you're running covered call strategies in your portfolio, you could think about buying it and selling covered calls, because I don't think it rallies up and creates a new high. I think it either bumps along sideways or it maybe has another leg lower. Atlas not doing there at the moment. We'll move through some of these fairly quickly. Suncorp under sell conditions, Telstra under sell, but as you know from prior recordings, we're holding that and we continue to like the fundamentals there. Fisher Paykel may be a little expensive up against resistance. Qantas not doing there at the moment. Insurance Australia, we think that's the downtrend's really ending there. It's in the early stages of basing and creating a new uptrend. We think the fundamentals there support trade range between 550 and 650. Brambles, so this will pull back and create an algorithm buy signal over the coming months, and we'd look to add that into model portfolios. As is with Reliance, we'll see that pull back and shift to buy conditions. Next, DC, cautious on that on the fundamentals. We saw a slight slowdown in earnings. Medibank Private, that'll shift back to buy conditions, and we'll look at the next algorithm buy signal there. Centre Group's been removed from the model. CSL, if we were to see another leg lower in CSL, we'll see that shift back to buy conditions as long as the sell-off's not too deep. But if we saw a correction maybe back down to 275, I'd expect CSL to shift to buy signals. As is the case with NAB, a correction lower, maybe back down around $25, we'll see that shift back to buy signals. Vicinity not doing there, Star not doing there, preference Crown over Star. AGL still making lower lows, lower highs. Transurban lower lows, lower highs. A2 Milk's under sell signals, but we're watching and reading the fundamentals carefully on this, looking for this to break out, create a new high, and a shift back to algorithm buy signals. Bank of Queensland under sell. Dexus under sell. Coles Group, so this we should see this shift back to algorithm buy signals. I think a correction may be back down to $17, so we're not too far from there at the moment, and it might give you an opportunity to have a think about adding Coles into portfolios if you don't already hold it. Spark, we expect any pullback there to shift to buy conditions. Orica, undersell, still lower lows, lower highs, not doing too much there. Origin, we think, could be in the early stages of creating a basing pattern, and maybe the fundamentals support a recovery in earnings over the next 2 to 3 years there, so we could start to see a turnaround in Origin share price. Sonic Healthcare, next major pullback that we see in this stock, it'll shift back to buy conditions, and you want to think about adding that if you don't already hold it. Likewise with James Hardie, the next pullback there, we'll see a shift to buy conditions. Magellan, we're not doing there. Nine Entertainment, we're not doing there. Wally's, we think that's still making lower lows, lower highs. Boral, this pullback's worth keeping an eye on, and I'll draw your attention to the next switch to buy signals there. AMP, we're not doing there. Still think that's lower lows, lower highs. ASX, we think the downside risks are pretty low here, so we continue to hold this in portfolios purely as a income generation trade. Amcor's broken out into a higher high. The pullback here, we'll see that shift to buy signals, and we'll see that added back into model portfolios. Not doing there in Ampol. Ramsey, will see that soon shift back to buy conditions. So the message for tonight is there's certainly a number of stocks that are in the top 100 portfolio that you want to be having a think about. And again, if you're joining us for the first time, what I've done here is click on Model Portfolio, selected ASX 100. If you want to receive notices when a stock's added or removed, make sure that envelope's green rather than grey. I like to view this by getting the least number of days to the top, which just shows me what stock's been most recently added into the portfolio, which is AZJ. Reese has been recently added, Mineral Resources, Bendigo, etc. So you can start to go down this list and think about constructing your portfolio around stocks that have been recently added to the 100 model portfolio. If there's too many names in this model, that's when you would drop back and maybe have a look at focusing on the ASX 50 or even the ASX 20. Thank you for listening in this evening, and if you'd like more information or some tuition on how to use the technology, please contact me on 1300 614 002.